Hey, today we've got 18 questions on mortgage instruments. Good luck. What is the primary purpose of a mortgage? A, to transfer ownership of a property. B, to secure a loan with real estate as collateral. C, to guarantee a fixed interest rate. D, to increase the property's value. B, to secure a loan with real estate as collateral. A mortgage is a legal agreement in which a borrower pledges real estate as security for a loan. Who holds the legal title in a title theory state? A, the borrower, B, the lender, C, the real estate agent, D, the local government. B, the lender. In title theory states, the lender holds the legal title to the property until the loan is paid off while the borrower has equitable title. Which document accompanies a mortgage to specify the terms of repayment? A, deed, B, promissory note, C, easement agreement, D, lease agreement. B, promissory note. Promissory note is a written promise to repay the loan and includes the loan amount, interest rate, and repayment terms. In a lien theory state, who holds the legal title to the property? A, the lender, B, the borrower, C, the title company, D, the local government. B, the borrower. In lien theory states, the borrower holds legal title while the lender holds a lien on the property as security for the loan. What happens in a mortgage foreclosure? A, the lender takes ownership of the property without a court process. B, the borrower sells the property to pay off the loan. C, the lender forces the sale of the property to recover the loan balance. D, the lender forgives the remaining loan balance. C, the lender forces the sale of the property to recover the loan balance. Foreclosure is a legal process in which the lender forces the sale of a property due to the borrower's failure to repay the loan. Before we move on, please help us out and subscribe. Hit that notification button so you don't miss a video. Hit the like button and comment below. Also, check out our channel. We have hundreds of real estate exam questions to help you pass your real estate exam. What is a deed of trust? A document that transfers ownership from seller to buyer. B, a legal instrument in which a party trustee holds title until the loan is paid. C, a lease agreement between a landlord and a tenant. D, a type of government-backed loan. B, a legal instrument in which a third-party trustee holds title until the loan is paid. The deed of trust involves a borrower, a lender, and a trustee. The trustee holds legal title until the borrower repays the loan. What is the purpose of a mortgage acceleration clause? A, to allow the borrower to make extra payments. B, to speed up the repayment schedule. C, to require immediate repayment of the loan if the borrower defaults. D, to reduce the interest rate. C, to require immediate repayment of the loan if the borrower defaults. An acceleration clause allows the lender to demand full repayment of the loan if the borrower defaults. Which of the following best describes a balloon mortgage? A loan with a low initial interest rate that increases over time. B, a mortgage where equal payments are made for the full term. C, a loan with small payments followed by a large final payment. D, a loan that is fully paid off within 5 years. C, a loan with small payments followed by a large final payment. A balloon mortgage has lower monthly payments with a large lump sum due at the end of the term. What type of mortgage allows the lender to change the interest rate based on market conditions? A, fixed rate mortgage. B, adjustable rate mortgage. C, reverse mortgage. D, balloon mortgage. B, adjustable rate mortgage. An ARM has an interest rate that adjusts periodically based on market conditions. What does private mortgage insurance protect? A, the lender in case the borrower defaults. B, the borrower in case of a job loss. C, the real estate agent's commission. D, the property against natural disasters. A, the lender in case the borrower defaults. PMI is required for loans with low down payments and protects the lender if the borrower defaults. What is an alienation clause in a mortgage? A provision allowing the borrower to transfer the mortgage to a new owner. B, a clause that prevents the mortgage from being assumed. C, a requirement for the borrower to refinance every 5 years. D, a penalty for repaying the mortgage. E, a clause that prevents the mortgage from being assumed. An alienation clause, due on sale clause, requires the full loan balance to be paid if the property is sold. Which type of mortgage is insured by the Federal Housing Administration? A, conventional loan. B, VA loan. C, FHA loan. D, USDA loan. C, FHA loan. FHA loans are backed by the government and require mortgage insurance. What is a reverse mortgage? A loan that requires increasing monthly payments over time. B, a mortgage where the borrower receives payments instead of making them. C, a high interest short term loan. D, a mortgage that requires immediate full repayment. B, a mortgage where the borrower receives payments instead of making them. Reverse mortgage allows homeowners to convert home equity into cash. What type of loan is available only to eligible military veterans? A, FHA loan. B, VA loan. C, conventional loan. D, jumbo loan. B, VA loan. VA loans are guaranteed by the U.S. Department of Veteran Affairs and offer benefits like no down payment. What does an escrow account in a mortgage transaction typically hold? A, the buyer's down payment. B, funds for property taxes and homeowners insurance. C, earnest money deposit. D, commission for the real estate agent. B. Funds for property taxes and homeowners insurance. Lenders use escrow accounts to collect and pay property taxes and insurance on behalf of the borrower. What is a second mortgage? A refinancing of the original mortgage. B, a mortgage taken out in addition to the first mortgage. C, a mortgage with a lower interest rate. D, a type of government-backed loan. B, a mortgage taken out in addition to the first mortgage. A second mortgage is subordinate to the first mortgage and often used for home improvements or debt consolidation. What is a deficiency judgment? A court order requiring a borrower to pay the remaining loan balance after foreclosure. B, a penalty for late mortgage payments. C, a government fine for failing to pay property taxes. D, a lender's agreement to reduce the interest rate. A court order requiring a borrower to pay the remaining loan balance after foreclosure. If a foreclosure sale doesn't cover the full loan amount, the lender may obtain a deficiency judgment against the borrower. What is hypothecation in real estate? A process where a borrower uses property as collateral without giving up possession. B, the sale of a property below market value. C, the act of flipping houses for profit. D, the removal of a lien from a property. A process where a borrower uses property as collateral without giving up possession. Hypothecation allows a borrower to pledge property as security while retaining ownership and use. Well, I hope you did well. Please help us out. Go ahead and subscribe and then hit the notification button so you don't miss a video. It really helps us out in the algorithm, helps us get our content out to other people that need it. Also, check out our channel. We have hundreds of real estate questions that will help you pass your real estate exam test. Have a great day.